Hello, everybody, and welcome to this webinar, an introduction to angel investing. I'd like to begin by acknowledging the many traditional owners of the land upon which we are all meeting today and pay my respects to elders past, present, and emerging. For myself, it's the Kulin Nation here in Victoria. We have more than 200 registrations for today's webinar, which is testament to the interest out there, and also credit to the 4 fabulous new angel networks that LaunchVic very proudly supported recently. As many of you will know, we commenced this Introduction to Angel Investing seminar last year, which feels like an eternity ago. The primary reason was to start a conversation about one of the biggest challenges we have in our ecosystem in Victoria, and that's a lack of seed and Series A funding, which is flowing to early stage startups. This is obviously a critical issue, but even exacerbated in our current environment. From the research we undertook last year, we found the average amount that early stage startups in Melbourne was receiving was 156,000 in their seed round. So that's averaged across all those companies that do raise as well as those that don't. That's compared to 278,000 in New Zealand and over 520,000 in Boston. Our startup companies are simply not getting the funding they need at seed stage. There are many factors driving this, but one of the areas that we know is a low number of active angel investors. This is in part reflected by the investments per capita. In 2018, the seed investment per capita was $3.60 per Australian. In New Zealand, it's $5 per New Zealander, and it's over $12 for everyone in the United Kingdom. We absolutely have to change this, and we know how important angel networks are. A report we commissioned by Professor Josh Lerner a year or so ago showed that angel startups that receive angel support are 70% more likely to obtain financing, 20% more likely to hire additional employees, and 10% more likely to have a successful exit. So for all these reasons, we're thrilled to have backed 4 new angel investor groups that are contributing to the Victorian ecosystem and are here to present to you today. We'll introduce them all properly in one moment, but for the audience, welcome. We have a Q&A channel. Please do send through your questions on this, and I'll do my best to moderate throughout the discussion. And the chat channel is the best way to communicate to each other, but just to reiterate, if you could send your questions through on the Q&A channel. So to get us started, we're asking each of our panelists to introduce themselves and pitch their angel network to you. Whether you're a startup or investor, we know you want to hear what they have to say. And once we've done that, we'll jump into a panel session. So as questions come up, please do send them through. So first up, we have Rachel. Rachel, welcome.
Thanks so much, Kate. And thank you and the entire LaunchVic team for your support of the ecosystem, for Working Theory Angels and the other angel networks that are represented here. It's been so great to get your support, and I'm super excited to talk about Working Theory today. So, just to reiterate what you said, Kate, it's so important to have a thriving ecosystem that we have that early stage capital at the top of the funnel. That's where everything gets started, and that will increase our birth rate and hopefully decrease our death rate as we get that downstream capital to follow. Working Theory was born because, one, we wanted more money to flow to the startup ecosystem. And as an individual angel investor, lots of people were coming to me saying, hey, I want to learn how to invest, or I kind of know what I'm doing, but I don't have deal flow, or if I'm doing my job and I'm writing small checks, I can't necessarily get into some investments that I want because of the size of my check. So Working Theory was designed to take the power of an angel network, reduce risk by making sure that we get those portfolio size big, and I'll explain that in a second, but then also have some of the predictability that maybe a fund has, but through a syndicate structure. So the way Working Theory works, it's different from some other angel networks, is that it's cohort based. So we just welcomed in our first cohort, which is just about 30 angels that came in. They pre-committed a certain amount of capital that they'll deploy over the course of a year. And that gives us predictability. We know exactly how much funding we have, so we can have transparent conversations with founders to say, we know what our minimum size check is. We take that money, we divide it equally across 10 deals that will probably take about a year to deploy. And then, of course, angels have the opportunity, if there's a deal that they really love, to top up as well. During that time, we're providing education in the due diligence process, giving them the opportunity to learn the nuts and bolts of investing. And of course, we're doing the hard work in making sure we have incredible deal flow and managing the quantity and the quality of opportunities. So our angels fall into 3 buckets that we found. One is really successful founders that they themselves have had exits, and now they want to look to give back and to learn about this asset class and become investors. So we love having them in the group because there's so much that they can offer our founders in whom we invest around their journey and what they've learned. The second bucket is at the top of their game in various industries or corporate sectors, and they really want to learn about this startup space. They have capital that they want to deploy. And what's great about that group is that for our founders, we have access to some of the best companies across Australia that could be potential customers or distribution channels. And then the third bucket is existing investors, and that ranges from VC managing directors to other angel investors, and they just see this as an opportunity for us to help place bets. On the placing bets part, one of the things we know about early stage investing is that the highest predictor of ROI net money invested is not the quantum that is of money that's deployed, but the size of the portfolio. So one of the things that we help our angels do is make sure that they get, at a minimum, by the time they graduate from their first year of the cohort, they have at least 10 deals in their portfolio. And then from that point on, we continue to bring deals and they can invest or not invest with no minimum, no maximum. We work closely with our partner, who's Eleanor Ventures, who spins up a syndicate for every deal. So it's nice and convenient for founders. We slip on the cap table as one line, and standing behind that one line is 32 amazing humans who will help them to grow. So that's working theory. I'm happy to answer questions later on, but I'll pass the.
Excellent. Thank you, Rachel, and really great to hear. I'm now delighted to introduce Ed Hooper, the founder of Angel Partners. Ed, over to you.
Thanks, Kate. My name is Ed Hooper. I co-founded a business with 2 of my friends called Omni Studio. Over an 8-year period, we kind of went through this kind of intense founder journey with angel money, VC money, moving parts of the business to the US. At one point, we looked at doing a kind of JV into China. And then eventually, after kind of 8 years, we ended up selling the business last year to a large US media company. About 5 years ago, myself and Andrew from Omni Studio kind of started angel investing because we found that as founders ourselves, we'd kind of learned a lot about how the startup kind of ecosystem worked. And we were seeing a lot of other founders working on great things. We then teamed up with some friends who were involved in family offices or worked in large corporate or kind of wore a couple of different hats. And then that led to us kind of making this informal group. And then over the past 5 years, we got to work with some great companies that we invested in, companies like Chronosphere, Tribe, Neura, Rolo. And so along that journey, we found that, we were spending a ton of time calling each other and sending emails and text messages and, spending a lot of time on legals and admin for each deal. And, other people were kind of tapping us on the shoulder saying, hey, I'd love to invest with you guys, or, I'm not sure exactly, I don't know enough about the sector. Can you kind of teach me a bit more about angel investing? Or, just a variety of challenges. And it sounds like it's very similar to what Rachel's been seeing as well. And so we decided to start Angel Partners so we could streamline what we were already doing, but then also bring a lot of other folks along for the ride. And so we've built out a software technology platform at Angel Partners. And that basically lets our members, once they've come in, see different deals, work out the deals they'd like to be a part of, see what other people in the group are thinking about all these deals. We tend to usually follow a lot of kind of professional investors or angels with a track record. But our group also does initiate deals ourselves. We've been running the platform in private beta for a couple of months, and we're about to open up to a larger audience, and we're really excited about that. And I guess because we're happy to kind of jump into other deals that other people are leading, we're really keen to work with a lot of other, I guess, angel groups or VCs or investors, just about, finding great companies and getting them the most capital. So happy to answer any questions and, keen to, learn more about the other groups and, share the joy of angel investing.
Thank you, Ed. And now it's Faden's turn. Innovation Bay, welcome Faden, and you've been setting up the Victorian Innovation Angel Network. So over to you.
That's right. Thanks, Kate. I think I'm just going to screen share. I had a couple of slides to include. So firstly, thanks for allowing me and inviting me to come and speak. I'd really like to thank Kate and the amazing team at LaunchVic for the inspiring work they're doing. And we work across the whole of Australia, and it's fantastic to be a partner with LaunchVic. We really appreciate the support into our vision to dramatically increase and evolve the level of angel investing in the community, which is desperately needed. And I'd also like to just quickly congratulate everyone else here today. I'm really excited to be talking with this amazing group of people, and I'm really looking forward to the partnerships we can evolve over the coming years. So as some of you know, Innovation Bay's come from very humble beginnings, and we've kind of very much grown off the support of our membership. We started with a very clear focus, which was to support founders on their journey. And we've never really altered from that path. We're experts at building communities. And that's what our plan is to do with our Angel Club. So I'll quickly run you through the model, and then a little bit of the thesis, and sort of discuss how we came to that as quickly as I can. So our Angel community is a membership-based model where members pay a yearly or a monthly fee based upon the specific tier of membership they jump into. We take no part of the transaction in any kind of way or any form. We do not mandate investments. We do not require minimum levels of investments. We do not manage funds. Our model is purely off that membership fee structure. Our membership's broken into small groups, which we call investment clans, and they come together on a regular basis to engage with founders and review deal flow, but also to build their own skills up and create a community around the investments. The Angel Club is then supported by us as very much a concierge service in our team. And then we've included a whole range of really interesting systems that we've identified globally to help us overcome the obstacles that we know have restricted investment happening in the past before, because we've been doing this for quite a while. Our membership profiles that we're after are quite diverse, but the key thing is that they're experienced investors inside and outside of tech. So just to be clear, we do not lead deals. What we do is we present a volume of quality deal flow in a continuous manner, and we really empower our members to engage with founders in a relevant and meaningful way. And then we support the process of making an investment from start to finish. And then we also monitor those investments over time. Our members know how to invest, and what they're really looking for is a community and exceptional experiences and quality deal flow. So just quickly zoom up. So kind of, where do we get to and how we can drive this forward? And our goals really is to build this community of angel investors and to be the smart money in the room, to educate these investors on how to be great partners for our founders. So in order to kind of achieve this, we're going to tackle it in a couple of ways. Creating communities, and we do that, and we've done that in the past before. We know how to do that through exceptional experiences, and we understand personal dynamics, how to work with people, how to create trust, and how to get people to participate together. We also want to provide access to our amazing founder community. We've been going since 2003 and been running investment dinners since 2011. And founders ultimately trust us because we're a founder-first network. So the way that we're going to engage that community with the investment community is an AI matching platform, continuous identification and promotion of deal flow, highly unique, immersive events where our founders and our investors really love coming to and want to participate, that creates community, and a database, like a two-sided marketplace. We ultimately understand that that's still not enough, and that we've got to be a very hands-on approach to drive this. So we've got an active team that's going to kind of curate and help work with investors to make sure deals do happen. We've got these great systems that we mentioned before that help the process. We've got a community that helps us validate deal flow. So the companies that we're connecting with investors have meaning. And then we've got a range of partners that we help with the back-end transaction process. So we know it's not just about presenting quality deal flow. It is about helping the process happen. And it's not just from a great pitch or a great opportunity. It's about running a great process and enabling investors to seamlessly invest and have a structure that really kind of makes meaning. So that's our Angel Club. So we're really excited to be launching it.
Awesome. Thank you. Thank you very much, Faden. And just a reminder to send in questions. I can see some coming on. We will definitely get to those. But lucky last is Ben Armstrong, founder of Archangel Ventures. Welcome, Ben.
Thanks, Kate. Hi, I'm Ben Armstrong, and I'm loving the way that Zoom makes my skin look so smooth at the moment. I've been investing in startups for about 8 years. I've probably invested in about a dozen companies. I've invested in dozens of companies. I won't say how many dozens. Achieved some nice exits and really enjoy helping founders create new disruptive companies. I've worked in business development for large companies, worked at a VC-backed startup as a founder, and in a large internationally focused venture fund for many years. What's that taught me? It's taught me that there's a gap in the market for principled, high conviction, early stage investors who can add value to companies and founders. It's the point that Kate was making before. And that's what Archangel is all about. We're building relationships patiently over many years with founders and later stage investors. And we've already experienced some great success. You can ask me about that later. I've been investing for a long time. I've seen a lot of what can go right and wrong. And I've probably reviewed over 1,000 pitch decks in that time. We're after people who want to learn alongside us and build their own angel portfolio. What gets me up in the morning is a belief that there are passionate people with a strong business sense that will persevere through thick and get so much energy from founders. And I hope in exchange I impart some wisdom and contacts. You've heard 3 other pitches. It's axiomatic that every startup says that they're unique, and probably every investor does too. Here we have 3 other early stage operators, but I like to think of us as colleagues rather than competitors. We have more similarity than our bigger VC cousins, and might even represent a better model, a better, more flexible model. We're all passionate about helping Victorian founders succeed. So come talk to us. Let's get to know each other and see if you want to invest alongside us. And that's me.
Awesome. Thank you. Thank you, Ben. And I'm going to kick off now by just reflecting on where we've come to in the last few months. It was early March when we contacted these 4 wonderful angel networks to let them know that they were being funded. And then, of course, COVID struck. So literally the weeks that pens were going down onto paper, all of us were going, oh my God, what's going to happen? And I personally had conversations with all 4 of you about what would happen and whether this was the right time to launch an angel network. And we all had very deep and meaningful philosophical discussions. How do you think the world's changed? Has it worked out the way you thought it had? And what are you seeing on the ground? So Rachel, I'm going to throw to you first on this one.
Yeah, sure. And I remember those conversations vividly with you, Kate. And they went back and forth a few times. You know, there were moments where, you know, you and I were both super bullish and ready to go. And then moments where all of a sudden we were hesitant and trying to figure out if now is the right time from both an investment perspective and a sentiment perspective. And so I did what I recommend founders do, you know, go talk to your customers, right? And so that was when I spoke to all of the potential investors who obviously I had been building relationships with in the months and years prior. And I just said, where's your head at? And what I found was there was actually a really strong appetite from these early stage investors, realizing that one, like now is the time when we need to double down on the ecosystem, because the innovation that's going to get us out of this and other, you know, events that we are likely or currently managing are going to come from our startups. And so now is the time to back them. For those, you know, who have the capital to deploy, this is a great time to make investments because there might be a little bit less competition for people who are willing to make early stage investments. And so, you know, I think kind of fortified by the angels around me who said, let's go. And me having, you know, continued strong conviction in this space, we went ahead and launched. And I have just over the last couple of weeks or months since we've been live, we have seen unbelievable companies come through. We have closed out 2 investments and are in the process of doing our 3rd. And each one, the actual size of our check has surpassed my expectations, sometimes 2x from our minimum check size. So it's very exciting. And, you know, Paul Bassett has very publicly said, these are the conditions that create the golden age of early stage investing. And I'm certainly seeing that true right now for both my investors and the companies we're backing.
Excellent. And Rachel, you've answered one of the questions online, which I'm going to make sure everyone gets a chance to answer. You are writing checks right now. So that's...
Yes. When we come back around, I can talk about some of the companies that we're backing.
Excellent. Faden, what's your views? What are you seeing? How's the world changed for you?
I think to Rachel's point, we're seeing a great volume of early stage companies at the moment, and we're definitely seeing an appetite to invest in those opportunities. So we agree that it's a great time to be investing at the moment. We haven't seen the market slow down at all. We just ran a very large renewable energy investment dinner, and we had a great volume of applications that wanted to present at that, and we were swamped with people that wanted to attend the event.
Excellent. And so are you also investing right now, Faden? You're ready to write, well, your investors are ready to write checks, is that right?
They are at the moment, and we haven't actually launched the Angel Club. We're launching it in November, so we're at the process in the moment of taking members and selecting members, I would say.
Excellent. And we're going to come back to that as well. Ed, is there anything that surprised you about setting up and formalizing an angel network over these last few months?
Yeah, there's definitely been a lot of kind of surprises along the journey. I spent a couple of years living in the US and San Francisco, and if you look at what AngelList and Gust and some of these other platforms have been able to do, combined with kind of, I guess, pretty friendly legislation, there was just, I saw a lot of investing and a lot of things happening over there that was kind of keen to see in Victoria and in Australia as well. And so, yeah, definitely for the setup, we explored like a lot of different ways that, you know, you could structure this. And I think it's evident across the, you know, 4 groups you've got here who are all kind of doing it in different ways. There are a lot of ways to kind of, you know, set up the group for success. And a lot of folks do want different things, but there's definitely a lot of complexities, and it's really important to get the kind of legals, licensing, and all those other pieces, you know, pieces right. And so just making sure a lot of that's really in order is part of the reason we haven't fully opened up our platform yet. But, you know, echoing what the others have said, like, you know, been seeing so many great deals where, you know, we're just keen to start, you know, connecting more people with these startups.
Thanks, Ed. And Ben, I'm going to ask you, how do you think COVID is having an effect on getting investment specifically?
So I remember, and probably other people remember, there was a few months ago, one of the famous VCs in the US sort of put out a memo saying everyone needed 24 months worth of cash. And I think there was sort of a rush to everyone getting their cash at that point. But I think the apocalypse hasn't happened. And, you know, a lot of businesses, like certainly in our own portfolio, there was a bit of a dip, but that was around sort of March, April. And then revenues actually recovered and sort of headed back on the trajectory it was on. So I think there's now sort of more money than ever in the ecosystem, which is good. I mean, it's still not enough compared to the US markets, which just seem ridiculously frothy to me. But I think there's a lot of people who are saying that they're writing checks, and I guess you've got to take that at face value. We're certainly writing checks like Rachel. We've done 2 investments already. So I don't think it's really slowing people down. There's plenty of opportunities out there. Maybe they're being a bit cautious about some sectors, particularly like travel related sectors or events perhaps. But by and large, I think everyone's looked at this as a great opportunity to accelerate investment in the trends that are transforming our economies, you know, sort of future of work, you know, all kinds of fascinating opportunities are coming out of that for everyone. So you've just got to be positive about it and look for the opportunities rather than be negative about it and sort of wallow in the current situation. Yeah.
Absolutely. And we're certainly seeing the, you know, Armageddon hasn't come, and there is a lot happening in the sector. We recognize many startups are doing it tough, but there are equally as many that seem to be doing really great in this environment. And it is about reshaping our economy. And it's something we bang on about a lot at LaunchVic. we've got lots of questions coming through, as I'm sure you've seen. Lana has asked a question: do investors need to qualify as sophisticated investors? And there's a second question that's sort of related to that, around what's your minimum check size. So I might go around each of you on that. So Ben, maybe we go back to you in the first one here.
Yeah, so because of the way the legal system works in Australia, yes, you've got to be a sophisticated investor, and I'm pretty sure that's the same for all of us, but I'll let everyone else answer that directly. So minimum check size is interesting. Like for us, like for the right person who could add value to the network over and above the money, and we're all about that, we would allow in a smaller check, but by and large, we're trying to encourage larger commitments from people. I mean, we did a deal recently where the smallest check was like $100,000, but that's a bit unusual. Normally, we're probably talking a few tens of thousands of dollars. But if you want to spread that over a year's investments, then we're happy to do smaller checks. So probably not the sort of 1,000 kind of range, but if you're closer to the 10, we're interested.
Excellent. Rachel, you're off mute. What's your...
Yeah, so I think like Ben and the others, you do need to be a sophisticated investor in order to participate in working theory. That is something that I hope, we can chip away at legally over time, because I think that's a major barrier of entry to folks who want access to this asset class and have the experience and the wisdom to make some great investments. So I would love to see that change. But for now, the sophisticated investor rules, according to the Corporations Act, is something that we have to abide by. Our minimum check size, because we want to try and reduce as many barriers as possible, and because we are deploying across 10 deals, I ask investors to think about, as a minimum, think about putting 5K across 5K in each of 10 deals over a year. So that's $50,000 over the course of the year. Across 10 deals. Now that's a minimum. Most of our angels are committing more than that. And then also, even those who are committing that 5K on the deals that they absolutely love, they have the opportunity to top up if we have that allocation. So there are a few folks that have come in under that amount, and that's because at the end of the day, we're here to get as many amazing people into the space and learning. So, there are no hard and fast rules. And because we have some folks writing very large checks, it balances out. But what's important for me is that we know what our commitment is, so that we have that transparency and predictability with our founders to say, we know that at a minimum, we are writing, call it, $150K check at a very minimum. And then each of our investments have actually exceeded that.
Excellent. And Ed, how about you? Sophisticated investors and minimum check size?
Yes, they do need to be sophisticated. We're coming out with our exact kind of process and details in the coming months, but in the past, based off deals we've been doing, the smallest we've kind of ever seen is a 5K, but usually kind of 10K upwards per deal.
Thank you, Ed. And Faden?
Yes, I think we're on the same boat on the sophisticated side. Our kind of thesis is a little bit different. We're really going after people that are already strong investors. They're already high net worth individuals. They're already investing a quantum at the moment. And we understand by engaging with these people that what they're really looking for is a bit of community. They want to invest with other like-minded people in so enriching their understanding of more diverse opportunities, and spread their investments across more opportunities. The problem they're not doing that, the reason why they're not doing it at the moment, is they're trying to manage it. A lot of sort of family offices don't have a lot of infrastructure. So we want to help them provide that infrastructure so they can do more investments in a collaborative way, and then we can help them manage those investments. So that's our kind of remit. We're sort of going to limit the number of members that we have to start with, and then slowly expand that over time.
Excellent. So while we're talking about some of the frameworks that you have to comply with, sophisticated investors being one in point, I'd like to move on to a similar area, related to government legislation, ESIC, the Early Stage Investment Company. How important are these concessions to angels for your angel cohorts? And do the tax breaks apply if you join a syndicate? So Rachel, let's throw to you first.
Yeah, sure. I'll start with I guess the first question is, Listen, I think ESSEC is an amazing benefit to further incentivize investing in early stage companies. It is not a lens through which I invest or not invest, but if a company is ESSEC eligible, then certainly that's something that is a great benefit to us. So the threshold there is 200K of annual turnover in the financial year. And so, you know, if a company is doing more than 200K, you know, that's a great investment, right? There's some revenue and some proven product market fit. So certainly I don't hold a hard and fast rule that it must unlock that tax benefit. For those companies that we do back that are eligible, our syndicate structure allows for that pass through of the benefit. So all of our angels will get the benefit.
We're losing Rachel there. I might throw to Ed.
Yeah, so
sorry.
I think with ESEC and, you know, some of the other benefits that Australia's got, whether it's the ESVCLP or, you know, accelerating commercialization and R&D, there's a lot of great, I guess, you know, incentives that Australia has. I think it's definitely on a case-by-case basis, and totally echoing what Rachel said, where, you know, if it's a really great deal, you're kind of less worried about, say, the valuation or if it qualifies for ESEC or some of these other things. But yeah, it does really make a difference. And what I found is when investors who don't know a lot about tech are looking at this and they do see that there are these, you know, kind of instant rebates basically for companies that qualify, it definitely gets them excited and is doing the kind of stimulation it's meant to do. So yeah, very, you know, always claim it if it's available, but not a deal breaker at all.
Excellent, thank you. We're getting a lot of questions through that sort of relate to, there's one from an anonymous Faden, how can I apply for a membership with you? Maybe it's worth everyone just doing a quick whip around on if people are interested in finding out more, how do they do that? How do they become one of your angels? Or indeed, if you're a startup looking for funding, reach out to you. Faden, over to you.
Yeah, just reach out to us. So we're all very personal here at Innovation Pay. And so just reach out via email or jump on the phone and give us a call. If you're interested in participating in the club, and we've got the structure around the different tiers that we're offering at the moment and when we're going to market. And if you're a founder, there's multiple ways for you to engage with us, from the events that we're running that focus on presenting, or just engaging with us generally through referrals. So we're very active on, obviously, email and messaging, and respond to pretty much everyone that comes through the door. So yeah.
Excellent. Ben, how about you?
Sure. Yeah, so the website's there. It's pretty good, and I look at everything that comes through. I mean, there's also a few others. So if you don't know me or connected to me, feel free to connect to Quentin or any of our advisors. You know, they're all supporters of ours, and you know, I'm sure you're at least connected to one of us that way. But if not, just come through the website, and we'd be delighted to have a chat.
Excellent. So if you're interested in finding out, reach out through websites and other channels. I'm going to just throw to Rachel and Ed to confirm theirs.
Yeah, can you guys hear me now? Is my connection better? Okay, great. So yes, same thing coming through the website. We're a little bit different in that we're cohort based. So we have this cohort locked down. We're going to be forming our second cohort in February. But if you're keen to get investing right now and get access to some of our deals, you can do so through Eleanor Ventures. So go ahead and reach out to myself or to Kylie Fraser at Eleanor Ventures, and that's a way to get going until we're ready for that second cohort to spin up, which will likely be February 2021.
Excellent.
And for angel partners, it's just head to angelpartners.com.au. There's a form you can fill out there, and then we'll be in touch with you to have a chat about kind of what you're looking to achieve and kind of what your situation is. And yeah, it would be great to have a chat.
Thanks. And I want to do a shout out. We're getting some questions from Teresa Engelhardt online. Teresa's one of our fabulous new board members at LaunchVic, and we're very grateful for the time that she's putting in to help us help the startup ecosystem. So thank you, Teresa, for joining us today. Teresa's got a question about how are you working together, and we had a bit of a chat when we were coming online about that. I'm going to rephrase that question in terms of, what do you think startup how do you think we should be working together as angel groups? Is this a competition, or is this a co-opetition? Is this a collaboration? Sorry, I'll throw to Ed. Why don't we start with you this time?
Yeah, sure. Look, I think there's some competitive element, but I think there is a lot of opportunity to, work together. So, there's a lot of deals, happening, and obviously want as many to happen as possible, because there's those ones where in the early days, they don't look that great, but then they can really grow into, some pretty amazing companies. And so the more coverage and the more deals that's happening is good for kind of everyone up the chain. At the same time, there is a balance where, it's obviously if the group doesn't get enough kind of hits after time, people might lose confidence in investing. And so I think there is that that appetite to kind of find the best deals and do a bit of a land grab. We've found in the past that having a pretty collaborative approach and sharing deals has worked really well. And already I've spoken to Ben about some deals that we've both been looking at, and definitely plan on having a chat to the other groups. So I think there is a lot of room to work together, especially when some of these rounds there there could be enough space for like each angel group to put some funds in.
Yeah, absolutely. And Ben, how about you?
Yeah, I'd agree with that. I mean, I think if you look at the space that we play, I mean, it's where usually there isn't VC money. I mean, it's sort of the sub-$1 million funding rounds. And I've certainly seen a number of those rounds put together just with angels, and that's, I think, or angel syndicates. And I think that's awesome. And I think there'll probably be more of it given the people that you see on this Zoom call and the kind of people that we're getting behind us. So, I'm excited, happy to work with anyone, but I also acknowledge sometimes there isn't room, and sometimes you want to keep something a little bit special to yourself, but I'll certainly try to share where I've got something that I think could benefit from the rest of the group.
Yeah. So we've got a question that sort of leads on from this from one of our attendees. I'm going to throw this to you, Faden. Is the Australian startup ecosystem big enough to sustain quality angel investments, or are we chasing rainbows?
I think it's the startup ecosystem has grown so substantially over the last decade. It continues to amaze us. We did a venture report last year that showed that about $1.1 billion of venture money went into the Australian startup ecosystem. That was local venture money. I mean, to think about that's quite considerable. The whole is definitely at the seed stage. We're seeing a quantum of companies being created at the moment, and really interesting founders, from first-time founders to founders that are recycling through companies like Atlassian, Safety Culture, Culturamp, and a whole bunch of other great companies. And so our perspective is there's definitely not enough angel money at the moment to invest in the opportunities that we're seeing. And going back to the previous point, I think that we've got a long, long way before we even brush the shoulders of being competitive in any kind of way. And for us, it's all about partnering the right founder with the right investor. That really needs to occur at a greater level.
Yeah, absolutely. And that's certainly what we think at LaunchVic. There are more startups than capital, and it's definitely one of the weakest links in our ecosystem is access to early stage capital. It's why we're so delighted to be supporting these 4 angel networks to really help drive that and provide an opportunity for startups to access capital so they can grow. We've got a lot of questions on industries, guys. People are interested in what are the top 3 technologies. Is there a preference in, particular areas, medtech, biotech, etc.? What are your views? Rachel, over to you.
Yeah, thanks. So we personally are kind of industry agnostic. We think that at this stage of maturity of the ecosystem, we're not ready to, pick a vertical or an industry to go hard on. Instead, what we're looking for is a very strong articulation of the customer problem. That customer problem is a large and growing market. It's being tackled by a founder or a team that has some sort of, we call it unfair advantage or disproportionate knowledge about how to solve that problem. And then I'm always looking for some special sauce. And the only way to describe that is there is something kind of above and beyond like the problem and the product that makes them amazing. So we invested in Chatterize, for example, which is an app that helps Chinese students learn English. I mean, it's an amazing product, you know, with a great outcome. But what I love about that business is how they figured out how to acquire customers, literally pennies on the dollar, by understanding how to use WeChat as an acquisition channel. That's that special sauce that Lane and Bell have figured out, and that is what is magical about that opportunity. So for me, those are the 4 lenses through which I evaluate an opportunity, and therefore, if you see the portfolio, it really ranges across industries. I saw that someone asked a question around social impact. The way that we think about it is we don't have a mandate around social impact or not, but when I talk about large and growing opportunities, those are tending to fall into areas that kind of overlap with social impact, whether that's environment, climate, education, health and medical. And so we are seeing a lot of our deal pipeline fall into those buckets, but that's less because we have a social mandate and more because those, unfortunately, are the big opportunities for our generation.
Yeah, absolutely. I'm going to throw the industry question to each of you, just so everyone on the line can understand where your focus is, if anything. So, Baden, let's go to you.
Sorry, we're again a bit like Rachel. We're agnostic. We work across all verticals, so we provide multiple platforms. Definitely, what we're seeing at the moment, though, that's very hot, is renewables, agri-tech. We think medtech's very hot also, but again, it's hard to pick a vertical. There's so much change, and there's so much change that's needed that we're seeing great innovation coming from pretty much everywhere.
Absolutely. And Ed?
Yeah, so we're also pretty agnostic. In the past, we've done B2B SaaS, marketplaces, consumer-facing apps, consumer and business hardware. The one thing we don't touch at the moment is medical devices. But aside from that, we're pretty agnostic. And similar to Rachel, some of the businesses do have a massive impact, and so we don't look through an impact versus non-impact lens.
Yeah, fantastic. Thanks, Ben. Ed, and over to you, Ben.
All right. So there's a few things we don't do. Biotech is one, just because we have no expertise at it, and I think there's people who do that much better. We're a bit mindful about things like gambling or defense-related things, because the family offices that back are with us as well. If I look at the areas that we've been particularly successful in, or I think we've got sort of a lot of skills from previous experience, it's around sort of health, education, enterprise SaaS, and fintech. They're sort of the areas. And if I look at where we've had the most success to date, probably actually direct to consumer healthcare, which surprised me. Like, I'm more a B2B SaaS kind of person, but you've got to follow the market and the entrepreneurs who are showing you these opportunities.
Excellent. And I have one for you, Ed. Is it appropriate to be an angel investor and a founder at the same time, or is there a conflict of interest?
Yeah, look, that's a great question. And I battled with that myself when I was a founder, because, we'd taken on other people's money, and we were just so focused on how could we kind of do this, make our business successful. After looking at what my friends were doing in the US who were founders and were kind of getting involved, I think if you have the right, balance and, hey, I've only got, this much time, and you're pretty upfront with the startup about what you can deliver, I think they'll understand. But I mean, I've seen founders where, a startup's taken their money, just that phone call where they can point them in the right direction on something that's pretty complicated adds such value and doesn't really take too much time from the founder. In terms of the competitive nature, obviously, if the business is in the same space as their startup and they maybe could be competitive, the founder would definitely need to disclose that to their board and to other shareholders, that type of thing. But it's usually best to kind of stay away from anything that could become a conflict down the road. But yeah, I think founders investing in other businesses is a great idea.
We're getting a few questions coming in. I have to say we're getting a lot of questions coming in today, so keep them rolling. I'm doing my best to stay on top of them. There's a few coming through on people want some colour and movement about actual investments you've made, why you invested in companies, examples, what are your main fears and uncertainties when you're going through that investment decision. Maybe you could just focus a few minutes on that investment decision and what are you looking for? What are the top 3 things that you would advise people on the line to be looking for when they're making an investment? Ben, what are your thoughts?
Big question. So, it's trying to sort of distill what the secret sauce is, and I think it's, it's different. It's different in each case, but I use a sort of fairly traditional framework that I've taken from the VC world to look at opportunities. But I think what really matters at the early stage, it's the founders, right? It's what's motivating them. It's seeing the insight that they have on the industry, the problem, seeing that they're not going to fall over at the first, breath of negative publicity or events in their business, and yeah, sort of seeing that they can actually make an impact and want to make an impact on the market. So that's what I'm sort of always trying to get to, and sometimes it takes longer than other times to get to that. In an early stage business, it's very hard to look at any numbers and draw the projection because, maybe they have a few months of revenue, but, there's not much else to see but the team and maybe a little bit of product.
Anyone else want to answer that one?
I'm happy to have a bit of a go. I mean, we've obviously seen a lot of different connections over the years, and I think that to Ben's point, there needs to be a really deep understanding of what the problem is that the founder's solving. I think that deep understanding really helps any kind of investor feel confident that that they can solve that problem and move forward. I think there's got to be a big picture. There's got to be an inspiring story there about what their purpose is in doing this business. It's a really hard journey being a founder at the end of the day, and there's multiple obstacles to overcome and pivots and whatnot. So you've really got to have a purpose and a big picture. Obviously confidence, but also humility. That's a really interesting balance. And then, for us, it's got to be a connection point. There's a lot of investors out there in the market. There has to be a connection between those two. And we're really driving to create a platform where that can happen, where it's just not a pitch. We find pitches are very kind of hit and miss. And so there needs to be a time where those two parties can come together. We think of it like a marriage.
And Ed, you look like you were going to say something as well.
Yeah, I think look spot on about the team, and I think another mistake not a mistake, but another thing I've seen investors new to the game do is they kind of chase businesses that just don't have a chance of that big return, and because quite a few of these deals are going to fall over. It is important that the space the business is playing in does have a big enough market. And so I think, aside from looking at the people and, what they've got so far, definitely looking at how big the problem is. And the classic one people say is it a, painkiller or is it a vitamin? And, there's some other, I guess, pieces that people can look at around those that at least kind of point you in the right direction in the early stages.
Mm-hmm. Rachel.
Yeah, I was just going to add a point. One of the things that I know as an early stage investor, and I encourage other people who get into this space to know, is that when you meet with a founder and she is telling you about her idea, her product, her business, you need to know that the product as it's presented that day is unlikely going to be the product that's going to change the world and making money. So you're actually not backing that solution. You're backing the founder or the team's ability to continue to figure out what is the problem, and as it evolves, to continue to figure out what the right solution is. And so that's actually a lot of the attitudinal or the attribute that I'm looking for in the founder is because the product that you see today is going to have pimples. It's going to be this weird, awkward adolescent with pimples, and you need to find a way to love it, but more importantly, find a way to have complete faith that equally awkward adolescent founder is going to find her legs and is going to continue to be close to customer, understand the problem, and evolve the product. And so that's the conviction that I'm having. not that this is the product that's going to change the world, but I back this team to continue to figure it out over and over and over again. And to your one question around like what are the fears or the challenges, is that every investment I make is very high conviction that this, you know, this will be a unicorn, this will change the world. But statistically, numbers tell me that that won't be true in every case. And so the one thing that I'm getting used to in investing is I'm used to like pretty tight feedback loops. So I make a decision and I find out if it's right or wrong. We can be waiting around for 6 to 10 years to find out if we made the right bets. So that's something, you know, there's patience and long-term belief and support that's necessary in this game.
Hmm. So would any of you invest in a startup that has a product idea but hasn't yet developed a product? Hasn't got an MVP? Ben, Ed, sorry, over to you.
Yes, so there was one that I was involved in about 18 months ago, where it was just the two kind of co-founders. They didn't have any kind of prototype or product yet, but the problem was really big, and it was clear that they were great founders and were going to be successful in this. And it was clear that a lot of big companies wanted this solved. And so just off of those pieces, myself and a few others ended up investing, and they've now gone on to kind of prove that out. But yeah, just the feedback that customers were saying about, you know, how much of a problem it was and just how much these two knew about the space was just really impressive, which is why we invested without any kind of product or MVP.
I'm seeing Faden nodding there as well.
I think it really comes down to the founders, you know, in many ways, like to what Rachel was sort of saying, you're investing in the people, less so there's no IP really at that stage, and that IP is going to evolve and change at 1,000 different ways. So there's got to be a belief in the two people or the one person or the three people or whatever it is that are founding the business, more so than the product, which sometimes exists, sometimes doesn't. I mean, for example, Lee Jasper, I think they did a $1.6 million round of a business plan at Aconex, as an example.
Yeah, I was going to say, look, I've invested in a company that had the wrong product. So it had a product, but it wasn't the one that succeeded, but it managed to turn that round and convert it into, and it's doing incredibly successfully today. So I've seen that happen as well. And that's Rachel's point, that you're backing the founders. The idea that they have when you come on board might not be perfect, might need to pivot a bit or 180 degrees. But if they're the kind of people who are going to make it succeed regardless, they eventually find the thing that's going to work. So yeah, I've had that experience. Also, yeah, I have backed someone with just an idea. And fortunately it's really working out, but I think that's sort of unusual for what we're really looking to back. You know, we want some evidence of product market fit, generally. What my conviction level can be in my own personal investing is probably not what I'm going to offer other people, risk than most people.
So looking to the future, we've got a question around venture, and I'm keen to get your thoughts on, you know, are you investing so that a venture capital does follow on, or are you trying to invest so that you can wholly own this exit? Rachel, I'm going to throw to you first.
Yeah, so WTA is not designed to be a life cycle investor. It's meant to be, you know, those first checks in. That said, when we structure the deal right, we have pro rata rights that we're able to offer the angels who participated and give them the ability to follow on. And some of our investors who've come in as angels, they've done it as a feeder because they want to lead larger rounds that come off of it. So I guess the answer there is the option to participate, but we are not designed to be, you know, the big check writers. We are the first checks in. Now, what's important is that we build and maintain really strong relationships with those downstream investors. So, you know, with VCs, you know, we're constantly in communication where they send us deals that might be too early for them, and we let them know what we're investing, what we're seeing, what we're excited about. And that's a symbiotic relationship that everyone wins when that works out well.
And in some sense, I think all of you know this was a bit of a furphy question because it was one of the things that we were really looking out for at LaunchVic. We want to be building a long-term ecosystem. So we recognize a lot of seed stage companies will need venture to go on and really grow and be successful. And a single check is very rarely going to get people over the edge. I don't know if I can see Faden's nodding, Ben's nodding. I think Ed's in agreement as well. We've got 5 more minutes. I'm going to end in the same way that I've ended previous sessions, a crystal ball. Last time we spoke to you, it was on a panel, some of you on a panel, and it was 6 months ago, and we were saying, where are we going to be? And the best we could sort of hope for was that the ecosystem was surviving and that there was investments happening. I think we've moved beyond that. So I'm going to throw out the crystal ball question to you all very briefly for an answer. Where are we going to be in 6 months' time to a year's time? Faden, over to you.
Through your efforts, Kate, we're going to have this amazing angel network that's going to be investing in a quantum of new startups, and we're going to see a seismic shift towards this economy.
Awesome, love it. Ed.
I think, look, I think by then, some of the challenges that we're facing now, people have really worked out how to find their kind of foundation and just kind of keep progressing things. Like there's definitely a lot of positives to, you know, what's been happening that could help the startup ecosystem. I've had numerous people I met in the US that were Australian who have moved back, and, you know, they're keen to mentor startups or join them or angel invest. And so it's great to have those people back in the ecosystem. You know, tech's done better and better on the, you know, the big tech companies, and a lot of these apps that people were unsure of have now been, you know, pushed into their everyday life. So I think a lot of things have been accelerated, and we're going to really start to see the benefits of that in 6 months. And yeah, as per what Faden said, the ecosystem's been getting bigger and bigger, and I think all these different initiatives are all going to kind of help push along even more. And, you know, whether someone wants to be a founder, an investor, or join a startup, it's just getting easier and easier. And yeah, couldn't be more excited.
Awesome. Rachel.
Yeah, I think we're going to see 2 things happen. Well, first of all, in 6 months' time, Working Theory will have made somewhere between 6 and 10 investments and have deployed a few $1 million into the ecosystem, which will be really exciting. I think that from a startup perspective, I think we're going to see quantity shift to quality. I think that we are going to see some companies not make it during this time. And I don't think that it's going to be a result of COVID. I think it's going to just be speed and accelerated by COVID. But what that means is that those who are left will be very high quality and have the potential to go on to be very successful. And then I think we're going to see a resprouting of really exciting, innovative companies from people who, you know, they say necessity is the mother of all invention. I think some folks who have not been in the startup space, their lives will be impacted in a way that now's the time where they take a crack at it. And so what I will hope to see is, you know, this groundswell of new sprouts that come up, of really bright ideas and great products solving customer problems.
Excellent. And Ben, over to you.
Sure. So yeah, I agree with all those comments. Like I think between us all, we will have made quite a number of investments and hopefully stimulated a whole lot of founders who might have even got follow-on funding by then if we're really lucky. So yeah, I'm hopeful that we'll start to see the fruits of the investment that we're all making and LaunchVic has made. Yeah, it's exciting times.
Excellent. It's really great to hear that we are getting through this, and you all did sign those papers in the end to get your angel networks over the line. We're very grateful. I think the community is grateful. And one thing that I also think is we're growing a new generation of angel investors through these programs as well. And I think that's a very exciting thing for us. We know that angel investors are key to our economy. We can't grow a startup ecosystem without angels. We absolutely need to make sure we do everything we can to support people who want to get involved. And despite the challenging times we found ourselves in, there are green growths of shoots of growth happening, and that's really exciting. Thank you so much to Ben, Ed, Rachel and Faden for sharing your insights and wisdom. And but most of all, thank you for the incredibly hard work you're doing to get these angel networks off the ground. 1 hour lunchtime seminars, one thing, all the legwork and paperwork and due diligence and everything else is another. Thanks also to the LaunchVic team for putting this on. A big shout out to Katie, as always, for putting on a great event. And finally, thank you to the audience. It's been a hugely interactive audience, a huge number of questions coming through, and we really appreciate you taking the time. And the only thing I can do is encourage you to get involved, reach out to these networks, whether you're a founder or an investor. Please do get involved in our ecosystem, and together we can grow something really exciting for Victoria. So thank you, everyone.
Thanks, everyone.